Okay, guys, let's go ahead and get started. Hopefully you guys can hear me all right. Give me an audio check, and I'm going to get right into it. Just give me a thumbs up or leave a comment. Let me know if you guys can hear me okay. Yeah, there's about a 20-second delay, so got to wait for it. But just once I get that audio check, I'll get into it and show you guys what I'm looking at. Show you how we're trading it. Or how we did trade it, I guess. And then also today, in the private member group, I pointed out a short trade setup on IWM. So I'll point that out and really just give you an idea of what I saw. Gave you guys that trade, that key level to watch in advance. So that's the name of the game, right? I'm always trying to put out stuff in advance. Doesn't all work out. And, I do put some trade ideas out there, and maybe an hour later it changes. That's the nature. I can't foretell the future. But, if something happens, then this is the action that I look to take. All right, that's kind of how it is. All trading is basically taking action based on certain events taking place. So, all right, so... let's see. We'll look at that IWM trade. All right, so here's what I was pointing out. All right, and in the morning video, I was showing you guys all these little wedges and these breakdowns that were taking place. So IWM on the hourly chart, this was the trade setup, negative divergence. All right, if I can grab the. Sorry, guys. Whenever I try to mark this, I run out of room. There's the negative divergence on the hourly. Okay, so we broke down. And then we started to kind of rally a little bit. I think we were right in here before the Fed came out. And I put out the trade in the community posts. That's where I'm putting these trade ideas for anybody that's not, if you're a private member, the community post is where everything's going to. And it's just for the members only. So I tagged that community post as the member only. I gave you guys the chart. And I said, look, if we rally to a back test, and I was looking at really anything getting over the kind of the high right here. If I look at the one, I think we spiked. If I go up to the 1 minute. Yeah, so I was looking at getting over the high, which was, I think I said 185.50, anything kind of spiking above 185.50. Well, you can see we spiked right there to like 185. All right, anytime I'm giving you guys change on a trade, take it with a grain of salt. We're not trying to grab the exact penny. We're looking at a $185 instrument here, 50 cents off. That's pretty much hitting the mark. So it spiked, right up to that 185, and I said that would be an objective area to short. All right, that's exactly what I said in the post. I said, if we can get up to 185.50, we're going to have negative divergence, and we're going to be back testing this broken wedge here, this bearish rising wedge, and it's objective to short at that level. Okay, so, that trade worked out, and if you shorted basically on that back test, then, you got a 4% gain just on that one. All right, so I did take that, not a full position for me, but I did take that trade, and I went into the close short, IWM, Triple Qs, Ford, I grabbed some of that. JP Morgan, I kind of was like iffy on, so we'll look at that one. But I think there might be something there. It wasn't as convincing as I was hoping, so we'll see. But IWM, Ford, Triple Qs. That's about all I have right now. But I think we might get that breakdown, guys. That big impulsive sell-off that I've been talking about forever. And it's just a matter of when it's going to play out. I do think it's going to go, but let's go to the Triple Qs here. All right, so we had some support here. Let me get my daily chart back. And we had some support here at, 260... It's about 269.79 on the daily chart. Sliced right through it like it wasn't even there. That's impulsive selling, guys. Volume, we're spiking in volume a little bit. There's a volume. Definitely some, slightly above average volume, I would say. Especially for, this is pretty high volume because most of the volume took place in the last, after the Fed came out. So relatively light volume given today's, half the day was a really low volume. So quite a lot of volume, obviously, right after the Fed. All right, so we sliced right through that. Now, if I go to the hourly on triple Qs, you'll see also had this kind of wedge pattern here and started to break down before they came out, back tested. This is the post-Fed noise, the vibration that takes place. But again, it's really, that since we back tested, if we ramped up, we're going to run right into the resistance. So that's where you should get rejected. And sure enough, boom, big breakdown from that. So this was all kind of plotted out. I did adjust my trend line slightly in the morning video because I was looking at it and I was like, it doesn't line up cleanly with the SPY and the IWM. So I kind of adjusted it, but sure enough, that was, a back test and a failure. So that's it. It was a rejection, clear rejection on the, on the daily chart, clear rejection on the hourly chart. We're below the June lows. So the June lows, this is where we got our first kind of, not our first, but we got a pretty nice strong bear market rally here off these June lows, 269.66, and boom, right back below it. So I don't think there's any way to spin it other than just bearish basically on that. So we'll just have to, 1 second guys, sorry guys, my kid asking me if he can play Nintendo. And all right, so where was I? There's also this trend line that you can see here. This is the bear market trend line. All right, here's your resistance right here. All right, see it up here. I've got it. It's so messy because I point it out all the time. So I was thinking, okay, if we rally to there, then that's going to be, major resistance. But, nothing says we have to rally. And, at this point, with this price action that I see today, it really does feel like we're probably going to just have a swift move down, swift crash down. Right now, I got it at about 238. We might undercut that 238 level, and I want to point out this right here. So look, support, a couple tags right there. There's another one. All right, so if I just extend that out, it's basically way down here. We could get down to that 238 and really have just kind of a crash basically, but get down there and just boom, hit that trend line right there. That would be down around 214, and then probably a swift move up, a swift recovery. That's what I would look for potentially. Now, I'm not saying that's going to happen, but that's a possibility. If it's going to really sell off hard, it might run down and hit that. Okay, so as of right now, let's just step back and just realize what we have going on. We have a nice breakdown today, but this is just one day, all right? It's a Fed day. I really need to see how tomorrow plays out. What did the big institutions take with the meeting today? What do they take out of that? And how do they start to position, right? They're not going to be moving their full positions around in in a half of a day after the Fed comes out. Do they change their positions? Do we see, increased selling? Do they step in and buy? Maybe that's going to take place. So tomorrow is going to be very telling, and really the rest of the week. It's going to be telling in terms of what these institutions, what the big money's doing. We want to be on the side of the big money. That's what moves markets. Okay, so we have on the daily chart again. If I roll out, let me reset my chart, guys, real quick. If I roll out, you'll see slight bullish divergence, obviously on the PPO, and not really there on the RSI, but it's a big divergence. I think it's probably run its course, this divergence right here. And yeah, I don't know. I'm looking for lower lows, honestly. That's kind of where I'm at right now. Looking for lower prices. But I need to see, I need to see how tomorrow plays out. We could just gap down and start crashing, all right? So that's why I went home today with some short positions, looking to probably add to that. So looking to sell the rip. As of right now, at least, if something changes, we'll go with that. But for right now, I'm looking to sell the rip. Looking at SPY here. So SPY, same kind of look. If I look at the hourly, there's your there's your wedge here. Broke down, run up for a back test. Didn't even get to a full back test before the seller stepped in. Maybe they spiked it, but it got close. All right, we got within pennies, or a couple, got within a couple bucks, $2, and then just boom, smash right down. Down a little bit more in the after hours, not a lot, but so it's just pretty impulsive price action to see that. When I go to the daily, this one's not as much damage has been done to the SPY than it was to like IWM and Qs. SPY's got some support, 370 there, and then you've obviously got the June lows, 362. I would think we probably at a minimum get down to that 362, okay? And then we'll see where it goes from there. If it can hold, great. The bulls held it again. But if we start to break down, then, down she goes, and we'll probably head down to down here at 338, 339, we'll call it 340, somewhere right in there. Okay, so looking for that. I continue to look for it. I don't see any signs that we bottomed, and sure does look like pretty impulsive selling there. Nice volume spike. Okay, so the hourly chart showed us that we had negative divergences. We had bearish setups. We broke down. We back tested, and we rejected. So tomorrow, look for more selling. If for some reason in the futures overnight we rip rally and this is a false breakdown, then we just have to take action because, at the end of the day, nobody knows where it's going. I'm leaning for more downside, and I've kind of tried to make my case. Let's go to the triple Qs on the weekly chart. I want to point that one out. Okay, weekly chart here. Yeah, so you'll see here, you've got some decent support, which was right there at 269.77, right? Cluster right in here where it held again right here, even held right here. We had a false breakdown here, and this is what I really want to get at. So you had a false break where you broke down on the weekly, really 1 week. We closed way down here. Following week, snapped it up and recovered and rallied. So that was a bear trap. But look, boom, right back down there. So if we close the week, and that's really the most important, I think, in my book, given that there's a few more days and the rest of the week will likely tell us where this market wants to head in the next couple weeks to a month or so, really to close out the end of the year. If we close the week below this 269.74, then I think that's going to be lights out for the market, and we'll likely sell down. So that's it. 269. It's about 269.50 really, but 269 anywhere you close anywhere around that level, it's going to keep everyone guessing. But if we close cleanly below it where we're at now or lower, then it's lights out, at least in my opinion. So that's the triple Qs. And when lights out, I mean, down here, lower. We've been shorting this thing the whole time, so I still think we have kind of a plungy price action. A couple weeks or months, some really plungy price action. The Fed's still talking tough. They're still getting away with their hawkish talk. They did, I listened to the meeting minutes. They did kind of start to pivot, it sounded like, but then they weren't really fully committed to pivoting. They still think they have room to hike rates and talk tough, and the market hasn't called their bluff yet. So, I think we go lower, and you get that really steep price action, quick steep price action. The Fed's probably going to step in again, maybe an intermeeting kind of thing. Let's look at the bonds, TLT, and then I'll go through any kind of stuff you guys want me to look at. I know I have, I was out last week, so let me see here on the TLT. So bullish falling wedge, all right. Now bonds bonds can rally. Bonds are typically a safety play. So is gold. So bonds and gold typically can be a safety play. Not necessarily gold stocks, but gold in general. And the typical way bonds behave is bonds rally when stocks are selling off. Maybe we're going to get back to that because I see this bullish pattern here on TLT. That we're on the weekly, but it's a bullish falling wedge. And going to the daily, we kind of undercut it, but recovered that trend line right there. And maybe the bonds want to break out. So no breakout yet, All right, I don't see any signs of a buy signal or breakout, but you start to break above this, you get that. That's a buy signal in bonds, which means rates are going to start to come down. That should help the stock market in terms of stop the bleeding. But again, it could be like this. Bonds could be rallying for a little while. Stocks are crashing, and while bonds are rallying, all right? And that's completely possible. It doesn't have to happen at the exact instance where all of a sudden bonds break out and then stocks quit selling off. Stocks can continue to sell off down to those lower support levels that I pointed out, and then you get the breakout or you get the continuation to the upside in bonds. So that's TLT. The interest rates, they're not spiking yet, but they didn't go down. So we'll see where this plays out. Maybe you get some sort of a back test or some sort of a move up here like this, putting more pressure on stocks as they're crashing. All right, so that's the way I'm leaning. I know I can change on a dime because the market sometimes changes on a dime, especially on a day like today where we get one look. We get a certain look, and then they can change that look, in the next few days. So just be nimble. And again, that's why I'm not in a full position, but it does look good. It's definitely enticing for a short. NASDAQ futures, see what this one's doing. I mean, look at that. You had some support. Maybe they're trying to throw some support right here. You can see these couple reactions right in here. That's about 109. What is it? 109.40, 175. And as I move out, we're below it now. So we'll see. Not impulsively below it, kind of just drifting. They might recover that. So things to watch. But this level right here, 11.081, we just sliced right through it. So, it's looking bearish to me. RTY. So on this, this is small cap futures. You had this trend line right here. All right, we broke and did a back test. All right, you can see, boom, back test, plunge straight down. So we're likely going to drift lower into the open down to this level, 1771. They'll probably bounce it there. Maybe you get a little bounce. If we gap down, depends on where we gap down, but maybe get a little bounce on the small caps right here. Still in an uptrend, clearly still in an uptrend. So got to take out this lower trend line to say that we're going a lot lower, but that's what we're looking at now. So probably slightly lower and then maybe a little bounce. If you don't bounce, you just go right through it. Maybe you wake up to a big gap down. It's just we're going to crash most likely. Okay, what else do we want to cover? The dollar. It's an important one. Look at that. Dollar breaking out. Let's see here. So here's a daily chart. Again, there's your uptrend. We just have not broken down. There is no sell signal in the dollar. So there, that trend right there, everybody's watching it, so it's very obvious. It will break eventually, but hasn't broken yet. So until I see that breakdown, it just doesn't make sense to be extremely long gold or dollar-sensitive assets. Although commodities look kind of interesting. They look like they've kind of bottomed and started to rally, but we'll see what happens tomorrow on that. Looking at the hourly chart here on the dollar, I had some resistance here. Boom, they popped it. So very similar to like the NASDAQ futures kind of breaking through their support. The dollar broke through its resistance. And that is it on the dollar, really. Gold. Gold actually didn't have too bad of a day. I mean, you look at gold bullion down 0.2%. So not too bad of a day, really. Kind of showing relative strength. And in general, it's got bullish divergence. Each one of these lows has been a divergent low. I suspect maybe it'll drift a little lower into the night and we'll make a new divergent low. But it's still looking relatively strong in the short term. We're kind of in this price action down here. Obviously, it's in a longer term downtrend. All right, but that's in the past. We're looking at where it's heading in the future. Still in a downtrend though, so no buy signal really. Just need to, but it's got a bullish setup for sure. Nothing to go long on, but we'll watch it. The GDX, the miners. So the miners have this isometrical triangle on the daily chart. It's bouncing, kind of compressing through there. It's moving day, so, or not today, but it's likely going to make a decision. Now this, it did break down below, but not that impulsive. Very impulsive move, obviously down to the trend line, but just barely inched lower. So not my favorite in terms of saying, oh, that's a solid sell signal. You know, if there's more selling tomorrow, then sure enough, yeah, that would be a sell signal. But I don't know. It doesn't look that impulsive to me to be a complete breakdown. So I'd be waiting on that one. And let's see, what else do we want to cover? All right, I'm going to read the comments now. You guys let me know what you want me to look at. I've kind of gone through the basics, letting you know where I think it's going. And we'll just, we'll just read it tomorrow. Sometimes I just have to sit there. Today when the FOMC came out, I wasn't really posting a lot. I was kind of sending a little post in the private group here and there, but I didn't want to just take the first read and tell you guys what I'm seeing. I really needed to see. You got to let the dust settle on those days and really, and I didn't see a breakout in the bonds. I didn't see anything really happening besides lots of just kind of back and forth. But then I did see the potential for it to do that back test in the IWM. So I wanted to point that out, got that out. And obviously it was there in triple Qs as well. So, the market was moving quick. I didn't have time to get out all these videos and charts. I mean, I just put it up there, said, here's a trade, All right. So I'm going to just do a quick little scan here and just go through what you guys want me to look at. FSLR. All right, so FSLR. I was looking at this one. Here's what I got. All right, I'm not in love with this trade really right now, but and I got out of the trade a while ago because it was just not doing what it needed to do. And I know some of you are probably still in it. I move quick. I mean, if trades aren't working and I start seeing, if the case that I try to make, it starts to get broken, I just exit the trade and move on because I've learned to, from experience, you get locked into a trade, you hold losses, then you start hoping and wishing, and it's not a road I want to go down. So FSLR, on this one, you now have negative divergence. We never had it before. When it was ramping here, we burned through the negative divergence that was in place. We kind of had it right here like this, but boom, they ramped it. Pre-fed, just a pre-fed ramp. There was nothing going on there, just low volume ramp. You also, one thing that you did have, and I teach this in my course. I don't go through it a lot, but I do notice it, is volume divergence. So you'll know this is the pre-fed ramp, right? So you have to expect pre-fed, you're not going to have big institutions taking huge positions. It's retail traders and maybe some algo shops and stuff, but they're scalping or whatever. But look, you're ramping up here, but look at the volume just dropping off like that. So that's volume divergence. Just tells you that it's just a form of divergence. Not the kind that I use usually to take trades, but I do notice it. It just helps show something's maybe not necessarily as strong as the price action would indicate. Now, I have this trend line here on the hourly, and we're still above that. If I go down to, I was looking at the 3-minute, kind of evaluating that. And, there's a trend line here. We're just kind of chopping below it. When I go to the hourly, though, you do have negative divergence now. So see it right there on the RSI and the PPO. All right. You have a PPO crossover where we made a little bearish cross right there. That's good to see, especially when it's kind of from way up here. And you've got negative divergence on the hourly. I think we're probably good for a move down to this trend line, all right, down here. That's about 142.50. That might happen tomorrow, maybe on a gap down or something, but I think we're probably good for that move. It didn't give me enough signs today to just want to short it. Yeah, you're below that little trend line, but it's just barely there. So I need to see some sort of gap and crap or just a gap down, I guess, or just an impulsive sell-off tomorrow. Maybe a potential day trade. Watch the open, see how it, watch the open. It might open and just crash and start selling down. So something to watch there. Okay, it's got the divergence now, so I think it's the probability is if you're going to open, maybe right in this area, maybe you open right here and boom, you just go right down to that, 142-ish, somewhere right in there. Okay, so that's really all I have on FSLR, and it might be something you could jump on the momentum to the downside. All right, XOM or DVN. Yeah, DVN got crushed today on the earnings. I was looking at that one. That's a big move, huh? 13%. When I noticed it, I think it was down like 7%. But I don't see anything here. When I'm looking at it, at least on the daily, there's nothing there. Hourly, you started to show some small divergence started to show up. This was a divergent high on both momentum indicators, but just not that much. And honestly, oil's been pretty strong, and I just don't see enough. I tried to take a short a little while ago on XOM. We caught like a little move right here, but it just wasn't enough, and I just got out of it, and I haven't really been interested in shorting it since. I just don't see enough. Look at the daily momentum. Made a new high right there, so no divergence on the daily. It's just showing me that there's still some strength here, and we don't want to short strength. So that's it on XOM. And it's not somewhere I'd want to buy either. We're not at support or anything. It's... All right, so what else do we got? Just scrolling through these guys, trying to find what you guys want me to look at. Yeah, TZA. Yeah, you can trade TZA. That's a leveraged one, so you want to make sure that something's trending. Don't chart it, though. TZA, guys, is a 2-time leveraged on the IWM, I believe. Is it 2 or 3? 3 times. 3 times bear, so you go long TZA. It's kind of the same as shorting IWM, but it's leveraged, so it has, it has decay. Now, the decay only really takes is a factor if IWM is just drifting sideways. All right, but if it's trending, and especially in your direction, then you should get kind of better than 3 times gains, but at least 3 times the gains. Now, I don't do these a lot because I prefer to just sell short or to go long. But if you don't have an account that can sell short, then that's one option. Now, if we're gonna crash, this should rip. If we're gonna not crash, this will fall. And if we're gonna drift sideways, this will fall. All right. It will just grind lower. So that is that. And again, I don't chart these. I chart IWM. I chart the non-leveraged kind of main index or ETF. Use that as your guide, and then this is just your position. All right. So what else do we got? The gold and silver stocks have been destroyed tonight. Yeah, they sold down pretty hard for sure. Don't fall in love with them. JPM, oh yeah, let's cover that one. So JPM, so this one's kind of interesting, and let me show you why I like it. When I go to the hourly chart, I've got this bullish or bearish rising wedge pattern. Now, it doesn't come from the bottom, but I can't make anything coming from the bottom really. It's just I can't make it. So this was the wedge I could get a couple reactions on. 1, 2, and then it was riding up it there. So I think that's enough reactions to validate that as a wedge, and then several on the top. And you can see there's where we're at right now. Ramped it up to the resistance, rejected below the wedge. In general, it looks good. A little bit lower in the after hours, not much though. Just not that impulsive yet, but it looks good. And when I go to the hourly, you've got this negative divergence here. So that tells me, okay, probably going to get, some continuation of the downside. When I go to the daily, no real negative divergence on the daily. And you can see here, look, you've got just new highs in momentum. So that's the thing. We don't have that divergence. Maybe we need to put that in. Maybe we don't. You don't always get it on the daily. Okay, sometimes all you get it on is the 60, and then especially in a bear market, because the bear market rallies are really impulsive. They usually are just kind of straight up, exactly like this, and there's just not usually enough time to build daily divergence. So the 60-minute is is oftentimes all you're going to get. Just to ramp up there, negative divergence on the hourly, and then you make the next leg lower. So, and you can see, I mean, this thing's just straight up from the after earnings or whatever, just up 30% or so within a month or a couple weeks. So yeah, that looks like a bear market rally. It's above the 200-day moving average. What I would say is probably going to be my signal is a break, a gap down, or an impulsive break below the 200-day moving average. That's really what I'm looking for on that one. So if we can get that, and that's sitting there down at 125.28, so not too much lower. Let's say we gap down tomorrow right below the 200. Okay, just as long as it can, then it's probably just going to sell off, just boom. All right, and that's going to be a sell signal. All right, that's what I'll be looking for on that one. And then support, there's some support here at about 119 and 105, and down you go. All right, 105 is good support, so you got to break that. Yeah, someone, let's see here. Meta, VTRX. Yeah, someone saying, no offense, but the last couple times I called a crash, it did the opposite. Yeah, it's hard to call exactly what's going to happen tomorrow. That's why I don't really advocate for day trading too much. Mostly it's swing trading. And we have to, we have to move. We have to mold our analysis. I can have a look. I can have a certain look. Everything looks good. Maybe 80% of the time that'll play out. And if it doesn't work out and it changes, I have to change. And that's the nature of trading. Not going to get everything right. So, but yeah, it could rally. Sure. And I've kind of pointed out those levels. All right. So what else do we have? Sorry if I'm skipping you guys. I just, Meta, yeah, we can look at that. This thing's pretty much left for dead, though. All right, so this is also really telling. When I see this, this helps reconfirm the fact that I think we're going to crash, or not in Meta, because Meta's already crashed, but just the general market. I want to take a look at Apple too, but look at this bullish divergence. All right, this is why we don't just go long on bullish divergence. All right, look. Divergent. Look, you got a divergent low, there's some more. All right, and then boom, gap down, and basically a crash. All right, and you look at the divergence, and we took it out. All right, pretty much took it out. Maybe we didn't quite take it out, but I guess we didn't quite take it out, but definitely. Let's look at the RSI. And hold on, just lining this one up. Well, I can't say we took it out. It's definitely still there, but just barely. So any lower, we're going to take it out. It's not, yeah, I wouldn't touch this thing, to be honest. This thing could go a lot lower. I just don't, look, you've got some big support right down here. You got some support right down here. All right, and we could be headed down there. That's $33. Who knows? And what's to say that we're not? Now we're going to get some bounces along the way, but there's some support right here, decent support right in here and I'd have to get down to the hourly chart to completely tighten it up. That's where I think we go. I'd say we go there in the short term, and that is about 74. Probably get a bounce down there. But you get down there, you're going to take out those divergences. It's just going to continue to reaffirm that we're in a bear market. All right, so let's look at Apple. I'm not going to go through all the things, but definitely want to look at Apple. It's been one of the stronger ones. On Apple, all right, so, some support here. We'll see how this thing plays out. It's gapping down in the aftermarket. The support I have is right about 144.50. We're down at 144.30, so pretty much right there. We'll see where we open up at. What are the buyers, and this will be telling. Well, institutions love Apple, so do they love it right now, or do they not want it? And that's this is going to be telling for us. All right, let me keep rolling through. Hey, thanks, Kobe. Appreciate that. Thanks for the super chat. So let me go into cash. There's never too much cultivation. Yeah, I don't know. Oh, have too much cash. Yeah, well, I've been buying some T-bills just with some of the cash that I have, because I don't want to plow all my money into the market. You always want to have some dry powder. You never know what kind of opportunity comes up. Real estate's getting smoked, so obviously, if but the prices haven't fallen yet. But there's no buyers, so it should continue lower. And I want to have cash on hand for opportunities. So I've just been laddering 4-week T-bills. Just get some return on the cash. It's getting inflated, but that helps. Just a way to kind of keep your cash liquid, but get some return. All right, snow. Someone says, snow, please, and what was your favorite ride at Disney World? Well, guys, Disney World's pretty fun. It's definitely tiring. It's like going to Europe. You get up and go the whole time, especially with kids. That Avatar ride was definitely one of the top of the list. That thing's really immersive, so that was pretty neat. And the Rise of the Resistance ride is pretty fun. Lots of good rides, but definitely, one of those probably was my favorite. I'm more of a roller coaster person. I like the big, tough roller coasters, but they have some fun rides there too. Snow. Coming into some support right there. This thing just looks like it's downtrending, but all right, 145.70. You need to break that. You're really close. So, I would, if I was short, especially from right up here, all right, because I think that's where I called out the short. I would probably cover that short very soon, if not now. I mean, you've got, if you grabbed it, you've gotten 16% in a matter of 4 or 5 days. Support's right there. So I would cover it close to that. And if it breaks, okay, you can reshort it because that's a break of support. But otherwise it could hold. Let me look at the hourly. Yeah, you got some divergence. It doesn't look like much. I don't know. It could go lower, but again, I would just cover at that support level and wait for it to break and just reshort it if it breaks. Yeah, you give a little bit up, but if it doesn't break and it bounces, you're locked in your profit. All right, let me keep rolling, guys. I'm gonna go for another 10 minutes and then I'm gonna wrap up. Tesla, all the favorites. Yeah. See, Tesla was holding tough right in there at about that 207. So for me, I need to see that go. Held tough at 207. Went right up to resistance at 234 and was rejected. But we're just range bound right now, chopping around within this range. 207, break at 207, down we go to the next level of support, which should be about 182 and a possible undercut down to 163. Okay, but we need to see a 207 go. So until that goes, no trade for me. All right, moving on. Let's see here. Run reported good earnings after the bell. All right, well, does that mean they went up? Yeah, okay. Let's look at it. Is there a short here? I like to short things when they have good earnings after the bell. Not always, but a lot of the times you'll get a ramp. I mean, resistance that I have on it is right there at about 2350, and it's gapping up to about 2315. So definitely ramping into resistance. I would look for that level, whatever happens around that level. If it breaks, maybe you run up to the 200 day up here at about, and 2680 would be the area of, yeah, right in there at about, we'll just call it 2650. That if you break above there, you probably ramp up. Otherwise, rejection. But I don't know what'll, it is resistance, so you could short it at resistance, have a close stop, because obviously if it breaks above, it's probably going to ramp up. What about divergences? Yeah, and you had some bullish divergence on the hourly. Divergent lows, so yeah, you could move up, right? 20 around the 200-day moving average. You probably want to look at shorting it, not necessarily, but there's a downtrend line here as well. Could get up there. I doubt it though. This is one of those pump stocks. It was pumped during COVID and everything. I suspect it's got a lot lower to go. Longs, well, I have some foreign stocks that I've kind of, had, and they're down. They're definitely down. It's more of a long-term kind of thing. I don't touch them very much, but I don't want to go into that. It's like 50 or 60 stocks, and it's not, my own personal active trading account, which is what I go through here on YouTube. More than doubled my money this year. Yeah, the VIX did not spike too much, did it? Yeah, I noticed that. So, but the thing is that the VIX isn't going to spike and then you crash. The VIX will spike on the crash. When you gap down or something like that, boom, the VIX spikes. That's how it works. You're not going to the VIX isn't just going to run up and start spiking and then all of a sudden everybody sees that and then it crashes, So you have to anticipate the VIX sometimes. Tupperware. What's the symbol? You got to tell me the symbol. I don't know that one. Upstart for a long, that's the real estate one, right? UPST. Well, first off, it has earnings, so anything before earnings is a gamble, and the earnings come out on the 8th, so I would probably just wait for that. Look, this one, why would I take this? I'm right here at the IPO, which was, IPO'd at what, 22, ramped up. It's only known this crazy ramp because they went IPO in 2020. They saw the mania and they just IPO'd into it. Most likely a lot of the founders and everybody just cashed out, and the venture companies, they just cashed out, and the only people holding this thing are the retail bag holders. Big gap down trap. On this one, this is probably dead money for a while, to be honest. I just wouldn't touch it. Guys, it's just my feedback on it. But yeah, you have bullish divergence for sure. There it is. Boom, on the daily. And so, okay, it could be a bullish setup. Watch I'd watch that trend line right there. Okay, you start to break that trend line. Maybe it happens on earnings. Maybe it doesn't. You start to break that, then just mark out these highs, all right? You're going to probably get reaction here. So that would probably be my first stop, about 36. And then these highs here, which would likely come in with the 200. So big resistance there, 52. And if you enter that gap, then you got a good probability of filling the gap up here at 75. There's the 3 levels I'd watch in this downtrend line. So if you break out, okay, you probably run right to here, probably get a pullback or a consolidation, then you break higher, pullback, consolidation, maybe the end of the run, okay, and then maybe you break higher. I would be taking profit at each one of those levels and waiting for breaks above the level without divergences showing up and all the things I teach in my course to re-enter. Hopefully that was clear enough. Guys, if you're not part of the member group, I suggest you join, but you can ask some of the current members. I think they're finding a lot of value in that. If you haven't taken my course, again, that's kind of the baseline knowledge, but it's going to give you the skill set, give you a checklist on what, kind of what I run through mentally. I put that all down in a checklist of how to find good trade setups. I think if you find trade setups that really check everything on that checklist, no guarantees it's going to work, but you're putting the probability in your favor. It's like playing blackjack when you got all the tens and high cards still in the deck. You have statistically have a higher probability of hitting blackjack and getting winning hands. So again, that's what you want to do. You want to take trades that have good setups. All right, so that course goes through all the setups. Check it out, link in the description. All right, where else do we want to go? Where else do you guys want me to cover? I know there's lots of, SLB. I'm not going to get into any more of the Fangs. Roblox, RBLX, Dia, Dow Jones. I mean, it's a breakdown, right? So there's your uptrend line on the hourly. There's your breakdown. Also rejected at resistance. This is what I talked about in the morning video yesterday. All right, there's another rejection. So downtrend, that's it. I just see a downtrend. And until that changes, sell the rips. Roku's getting killed in the after hours. All right, well, let's take a look. Probably earnings. Yeah, earnings. See, look. Okay, that's really big getting killed, huh? 17%. So it's down at 44. Again, this is probably what I'd be looking at. It's just more getting killed in these kind of hype stocks. Roku's one of them. Although I like Roku. I mean, as a company, I use their product. I think it's a pretty decent product. But there's resistance. Ran right into resistance, 58. And boom, rejected, down. So this thing's not bottoming yet. We'll look for bottoms, but it's just not there. We'll see what look at that. We'll see how the divergences play out tomorrow after it opens. Might be gapping down for might be just kind of a capitulatory move where it after earnings sell off, get crushed, everybody exits. But let's look for volume there. All right, so that's Roku because I don't see any trade on it. Netflix. So Netflix has this gap to fill, but it's just kind of stuck in between. And I'm not interested in Netflix here, to be honest. I just can't, maybe it runs down here, hits this, and then runs up and fills the gap. I don't know. I just don't see enough for a trade set up there. Okay, Intel. Yeah, I know that one. I've been looking at that one for sure because I've seen it. This was the level I talked about, 2850. It looks like. Let's go to the weekly. Yeah. See, so I had that marked as pretty decent support / resistance. I was looking for a potential bear trap, and we might still get it. This is a weekly chart. Week's not over. Maybe you still get it. Let's look at the daily. You got bullish divergence right here, so maybe we still get it. Again, I'm looking for that. You did get a one-day close above there, and then they sold it, so probably a weekly close, guys, on that one. Weekly close above that 2850 area. And not just right on it. You need to see a big, a nice impulsive close above it. All right, you get that, you're probably going to start to run higher. But I don't see it yet. What else do you guys have? What else do you want? AMD? What is SLB? Is that Schlumberger? SLB? Schlumberger. Let me look. This is an oil stock. They're like an oil drilling company or something. This one. So I've got this as my upward price channel. This one I almost need to adjust. There we go. Got some more data points. So it's in an uptrend. You're near resistance here. No divergence on the daily. No divergence. Not really any divergence on the hourly. Maybe slight, but not much. I think it goes higher. I think you're going to head up to the trend line there. That would be my guess. Up here about 56-ish. But again, why, you know, if you're long from down here, you're getting close. I mean, you want to take some profit along the way, but it looks like it could go a little higher. Why is my banner green? I don't know. What banner? Who knows? Oh, my thumbnail? That's just because it's the live stream one. I just reuse it. You know, guys, my channel, I realized a while ago that my channel, I'm never going to have millions of subscribers. It's just not, I'm not entertaining. But what I try to give is, you know, valuable information. So that, you know, the subscribers that I do have are pretty engaged. And that's why I created that private member group, because basically that's where most of the people that are part of my channel are going to find the most value, is just, you know, really focused trade ideas, really engaged, you know, within the markets, because that's what this channel is about. So I don't spend a lot of time editing. I don't spend a lot of time with my thumbnail banners. I probably could do a better job, but I'm not, you know, I'm just not going to rope in a lot of the people looking for entertainment, you know. I'm not Meet Kevin. All right, let's see here. All right, 2 more, and then I got to get going. Thanks, Devin. Appreciate that. Thanks for the super chat. D-Dog, Data Dog. Yeah, that's going to be that's one of those Kathy Wood things. Let's take a look at it. Was it a SPAC? Because I know there was lots of SPACs. Nope, not a SPAC. So that's good. The SPACs, most of them are garbage. All right, so this is where it's heading, most likely. See that gap to fill? All right, I think we're heading down there. And I've had it for a while, and we're heading lower. Now, earnings are coming out. Who knows where earnings go? Let's see what if we can scope anything on the... I mean, you got divergence. You definitely do on the daily chart. Let me look at the hourly. Yeah, I mean, you got some negative divergence on the hourly, so I wouldn't want to take it before earnings, you know. It's just, and if they miss on earnings, you're probably going to gap right down to the gap. So that's the gamble. But for me, it's just too much of a gamble to just take a position right here, right before earnings. Could go up, could go down. I don't know. I need, you know, when earnings is out of the way, we can trade on technicals, you know, and we can, you know, manage the risk when, you know, but you can't manage the risk taking a position right ahead of earnings. The momentum says it's gonna, you know, the momentum says we should rally, but divergence isn't a reason to just buy. I need to buy. I want to buy something with bullish divergence at support, or buy something with bullish divergence as it breaks resistance. Okay, that's kind of all part of that checklist that I have. One more, guys, and then I gotta wrap up. I'm just, what do you guys want me to cover? And hey, drop me a thumbs up if you haven't done so. I don't know how many I got, but hopefully everybody's giving me a thumbs up. I do appreciate that. PI? What is PI? I don't know what PI is. TECS? Qualcomm? All right, there's lots of good ones here. NVIDIA, Qualcomm. I think NVIDIA's probably interesting, but I haven't charted it too much. Let's do Qualcomm. Qualcomm. All right, so you know where I think it's heading. I've talked about this for a while, and it's right down here. Couple reasons why I love this level right here at 94.50. And I'll just point it out all over again. All right? Big resistance. Right? That, it didn't quite tag it, but it did here. All right? And it did right here. And then it gapped up. Boom, gap up. All right? So big resistance should be big support. All right. The other thing is potential uptrend line, not confirmed, but a potential. You've got 1, 2, and it falls in line with that level right there. That's my target. That remains my target. When I go to the divergence, or when I go to the momentum, look, you've got upward momentum, okay, bullish momentum, bullish price action, but it's not a divergence. It's not indicating a reversal in trend. It's just indicating a counter trend rally. The trend is down, lower lows, lower highs. This was indicating a counter trend rally. You got the counter trend rally. I think it's lights out on this one. Now, I need to see a break of, yeah, I need to see this 110 go. This 110, look, we had one little break below it, and boom, all right, so they gapped up and moved. Once this 110 goes, should be lights out on this one, okay? 105 after hours. Wait a second, am I not reading this right? I don't see the after hours on this one. I guess they closed the after hours. It says 105 after hours, huh? We'll see. I don't know where it opens up at, but, oh, it just had earnings. I got it. So, well, there you go. That's what I would say. Gapping at 105. That's gapping down, breaking support. So I think it's lights out. I mean, you're probably going to get a little bounce here at 100. Tomorrow, probably a move down to 100. Whether it rallies first or not. If it rallies, I'd short the thing at 110. You know, or 109.50 or whatever. But if it doesn't rally and it just sells down, probably going to get a little bounce at 150. But ultimately, I think you're heading right down there at 94. Okay, so that would be my target. I'll have to look at that one for maybe tomorrow. If it's at 105 after earnings, then, you know, maybe they'll give us an opportunity on a rally into that 109 to get in. That would be beautiful. 109 down to that 94 would be a move of about 15%, 14.5%, 14%. I'll take that for a trade. All right, guys. Well, that's all I have. So I'll catch you guys tomorrow. All right. Take care.